Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. What, oh what, will they talk about this week as far as industries? Well, let's bring in Charles Rothblatt, our senior market analyst, without any further hesitation, and he will tell us. As a matter of fact, I'll tell you first that on his radar this week is third quarter earnings season, and it is a critical earnings season. And I would imagine that investors' primary primary goal is to be on the lookout for any signs of actual earnings growth. And I would imagine that if there is some, then it will be good for the economy and the stock market as far as stocks moving higher. Is that true?
Yeah, but there won't be a whole lot of growth. When we actually look at the S&P 500 index as a whole, we're actually looking for earnings to drop. The index itself is expected to report a 15.4% drop in per share earnings. We're looking at the median company earnings actually falling 14%. The difference between the two numbers in the S&P 500 forecast is a weighted number. So your larger companies actually have more weighting, or have really more influence on that forecast. So that's hence the difference. But by and large, over 300 companies are actually going to report a year-over-year drop in profits.
Not good.
Not good, and we're actually going to see a drop in revenues too, a drop of about 7% in revenues. The difference is really just how the companies are reporting. Some of the share buybacks actually influence it, so maybe your net income loss is a little bit smaller, but you're also spreading it among a smaller group of shareholders, so therefore your loss itself is bigger. And there's a couple company-specific deals there too, why the revenue number actually is actually smaller loss than we're going to see in terms of a drop in earnings.
So another less bad quarter?
It will be a less bad quarter, and I think one of the key things is really not so much the numbers we're seeing right now, the 15% drop in profits or the 7% drop in revenues, but it's really a question of how do companies compare against expectations. Everybody knows companies this quarter are going to still be up against tough year-over-year comparisons, but the question is, are brokerage analysts, again, too pessimistic? That's what we saw in the second quarter. My guess is with the third quarter, this will be another situation where estimates prove to be too conservative. And so although the numbers are not going to look good on a year-over-year basis, I do think they could come in ahead of expectations.
And so expectations are going to play a critical role here.
Oh, I think absolutely. It's going to be really a shell game of expectations, because when we go back a year ago, I think it's important to realize we were still growing. The credit crunch didn't tighten its grip until September and October. So when you look in July and August of 2008, it was actually overall pretty good times for the economy. Yes, housing was struggling, banking had some problems, but overall the economy was growing. Now you have all those companies facing those tough year-over-year comparisons, and that's why you're actually going to see earnings drop, even though the economy itself has stabilized.
All right, well, there's a bright spot to this conversation here. I don't want to be a total downer. Charles has outlined some industries that are likely to show growth in this third quarter reporting season, and one that I kind of found curious is home builders.
You know, it's really a numbers game there. And when I ran the numbers and I first saw home builders at the top in terms of growth rates, I was like, what? And immediately wanted to take my database, throw it against the wall, and see what came out of it next. But what you're really looking for, it's a relative game. If you remember last year, the home housing market actually was contracting. Mortgages were becoming increasingly harder to get. Home prices were falling. And now, even though home prices still are falling, we're really starting to see stabilization in the housing market, where you have now seen about 4 or 5 months of increasing new home sales, 4 to 5 months of increasing existing home sales. And so if you're a home builder like a D.R. Horton or a Pulte Home, you're really looking at a business that's stabilized versus a business that's contracted. I don't want to, kid anybody. We're still looking at losses for these home builders. But when you look at what they're expected to lose this quarter versus what they actually lost a year ago, it's going to be a sharp improvement. We're actually looking at increases in the bottom line of 50% or more. So on a year-over-year basis, the home builder numbers are going to look fantastic. But on an actual basis, as far as how they did in the third quarter, the numbers are still going to be pretty terrible. They haven't returned to profitability, but on a year-over-year basis, they are going to show some of the best comparisons.
That's interesting to me as well. And another industry that you show showing signs of growth, insurance. Is that primarily on the property casualty side?
You know, my first thought it was because we have had a very tame hurricane season. Knock on wood.
Yes,
or
absolutely.
you know, being from Houston, I'm a little bit, having lived in Houston, I'm a little bit more sensitive to hurricane season.
Yep.
And I grew up in Virginia, which also gets hit by hurricanes. But really, it's across the board. We're looking at some of the multi-line insurance companies as well. And I think it's a combination of factors. I think you're looking at the market stabilizing, which helps insurance companies. In certain areas, we're seeing premiums improve, and I think some cost cutting. So it's a lot of smaller factors actually playing the role of insurers. But we are actually seeing growth in them. And some insurance companies were actually looking at both revenue and earnings growth, and that's a very positive sign.
Yeah. There's at least one more industry that Charles sees as reporting some growth, and there are a couple that he sees reporting to the downside too. Industries now, not individual companies. You'll want to go to the text version of his industry rank analysis this week to find out that information. It's right on the homepage at Zacks.com, linked to it off of the headline right under the category Industry Rank Analysis. Couldn't be more simpler. With Charles Roplet, I'm Terry Ruffalo.